The BS dominated the domestic equity market as market capitalization lost 20 billion or 0.08% to close at 23.971 trillion compared to 23.991 trillion on Wednesday. Also, the all-share index lost 35.72 basis points, equivalent to 0.0%, to settle at 44,011.22 from 44,046.96 on Wednesday. The market's weak performance was primarily driven by sell-offs in Tier 1 banks such as Zenith Bank, Access Bank, Access Holding and Guarantee Trust Holding Company. Market breadth closed negative as 18 stocks declined while 12 advanced. An analysis of market activities showed trade turnover settled lower relative to the previous sessions, while the value of transactions went down by 70.4%, a total of 97.7 million shares valued at 847.88 million were exchanged in 2,980 deals. Today on the show, we have Mr. Christian Ayalasi Isaac to help us analyze the market. It's good to have you join us this morning. Good morning, sir.
Yeah, good morning.
Yes, the market closed down 0.0% yesterday. What do you make of this, sir?
Yeah, well, during the previous day on Wednesday, when the all-share price index was up and the market capitalization was up, sectoral analysis also all reported in the green, we had our reservations. We knew that it was going to come down, definitely, because if you watch the market over time, we've not had sustainable growth in the indices for maybe 2-3 consistent days consistently or consecutively, as it were. So we saw it play out yesterday, like you rightly said, the NGS all-share index and market capitalization lost 0.08%, while the NGS all-share index is closing at 44,011.22 points. The market capitalization closed at 23.97 trillion. We saw the capitalization shading as much as 19.46 billion. So that tells you that there isn't sufficient liquidity in the market. And in fact, the injection of funds and some policy instruments is required at this time to be able to stimulate demand in the equities. We need to see some injections in the forms of foreign direct portfolio investment for us to also participation, increased participation by the pension funds, in order to stimulate growth in the market. We saw it yesterday that GTB was the highest stock in terms of value, and what the value we're talking about here, just 134 million. And then in terms of volume, it was Transcorp that was the most active in the market. Across the sectors that are under our purview, you'll see that it is only the NGS insurance that reported in the green color with just a paltry 0.17%.
All right.
So that is the position. That's where we'll find out. So.
Yeah, let me come in there. One thing that we've noticed is that the banking stocks have been seeing much activity. What is responsible for this, sir? Like the banking stocks, for yesterday and the day before that, the banking stocks were really, really sold. What's responsible for that?
Let me tell you this. The banking sector, which is the financial system, is at the center, is the engine room of every economy. And now, bringing it back to the capital market, the banking sector, investment in the banking sector is one way for investors to assure themselves of quality diversification across economic sectors, because from the lending portfolio, the banking sector lends to virtually every other sector of the economy. So depending on the depth of their investment, or their risk assets in those other sectors, you find out that the banking sector plays a very critical role in those other sectors of the economy. So by investing in a bank, for example, you're also investing in MTN because they have a lot of funds, okay, in the telecom sector, in Africa, Eastern Africa, for instance. If you're investing in the banking sector, you're also indirectly investing in the beverage sector, food and beverages. You're investing in the banking sector, you're also indirectly investing in oil and gas. So it is at the center. So at every point in time, other things being equal, other factors being equal, it is expected that the banking sector stocks should have what attraction from the investing public.
All right. Now, you mentioned factor, and we know that one key thing that drives the market is inflation. And earlier this week, we had the inflation numbers. But did the inflation do a number on the market, in your opinion? Because the day the result came out, the market went down. The day after, the market went up. That was yesterday. Now the markets went down yesterday again, sorry. So what do you think about, did inflation have much impact on the market? Inflation numbers?
Inflation numbers affect the market to the extent that when the rates are raised, when there is inflation, it's expected that monetary policy rates will be raised. And when monetary policy rates are raised, it is expected that the lending rate will be raised. So what does that imply to investors? When the inflation is high, you'll find out that investors will want to quickly go for investment instruments like fixed income instruments, like the debt management office issued some debt instruments sometimes last week. You also saw that within that last week, or prior to that last week, that there was a primary auction within the banking system of the federal government treasury bills. Okay, and these are fixed income risk-free securities. So when there is inflation, the risk for investment is high, and one of the ways that investors will want to cushion this risk is by diversifying into assets that have an assurance, into assets where you're clearly sure, you can say with a reasonable degree of assurance that this is what you're expecting at the end of a given financial period, or at the end of a given investment horizon.
All right.
So that is what you have seen.
Yeah.
So when there is a high interest rate, okay, a high inflation rate, it means that interest rates on debt instruments, on fixed income instruments, will definitely go up. Okay, and that becomes an attraction for investors, and the return has certainty. There is an element of certainty built into it, because at the time you're going into that transaction or into that investment, you already know what you are going to get, rather than investing in equity which has variable returns, which is very much exposed to inflation. But you see, for banking stocks, again, that brings us back to banking stocks. For the banking stocks, the banks are core players in the lending system. So, because they are lending, they are in the business of lending, they have to lend.
All right, sir. Let's look at for today now. What should be in one sentence? What should investors and the markets what should we be expecting today from the market?
A cautious buy.
A cautious buy. Well, yeah. Thank you very much for that. That was Christian Ayalasi Isaac, investors and securities analyst. We're going to bring him back, but for now, we will still to come. We have our next segment. So please, we have the implications of the dollarization. Our stakeholders in the port sector have called on operators and authorities to commence charging in Naira as per a directive. Although these authorities claim this, they've refuted these claims, we shall be analyzing the effect of the continued dollarization of the Nigerian economy. Please stay tuned with us. We'll be right back.